We're back with Greg Taylor. He's our featured guest of the morning, also an investing expert who has followed gold very closely. And gold has done what gold investors have wanted it to do over the past couple of months. Can these levels stick?
Well, we hope so. And I think gold's been a frustrating commodity for the last few years. It's certainly one of these commodities that people kind of look at and say, well, when we got inflation, gold's the perfect hedge for this. And we've got inflation in the last few years. And gold really hasn't done that well in U.S. dollar terms. And a lot of people are questioning what's this place in the portfolio and will it work this time. And this $2,000 a U.S. ounce has been kind of this level that it's run into a few times and failed. And we had a good run this summer where we got through 2,000 and held it for a few months, but broke down as you were mentioning in earlier October. But we made another run through 2,000 as the U.S. dollar started to pull back again. And I think the big question on investors' minds is this the time that gold is actually going to go on a sustained run? And I think there is still room for optimism. It does certainly feel, and everything comes back to central banks, but central banks do look like they're done their rate hike cycle. Certainly the central bank of the U.S. looks like it is, and that should mean the U.S. dollar start to fade a little bit here. That'll help gold as a backstop. And then if inflation lingers on, we've got this kind of inflation of almost a stagflation environment, which stagflation is one of the best times for gold and a good on-correlated asset class for most investors.
You think stagflation is better than high inflation? High inflation would typically mean a high appreciation in the U.S. dollar as the central bank fights high inflation with higher interest rates.
Absolutely, yeah. I think stagflation is the perfect environment for gold, and it could be something that maybe not happening in the U.S. next year, but could be happening in other parts of the world, and will probably keep demand for gold up. Also, with geopolitical tensions higher, people are looking at different stores of value, and I think that's bringing people back to gold. So we're seeing this in real assets across the board. Certainly, Bitcoin's had a good run, and some people still view that as the new digital gold, but there's probably not a bad time to go back and look at the original gold, and gold is actually acting well the last few months.
So investors always have the choice between buying securitized gold. They can, for that matter, buy physical ingots and put them in their safe deposit box. But they can buy securitized gold, futures gold, or they can buy shares of gold mining companies. What option do you think is best right now?
Well, it's probably good to have a bit of a mix of both. So you want to have some exposure to the commodity, whether that's through an ETF that's linked to the physical or it's the physical bar if you want to store it in your own basement. But also having ways exposure to the companies is good too. But you have to be aware that some of the environments that gold prices go up in is bad for an operating mine. So if you see a lot of costs in pricing and oil going up, that squeezes the margins on gold companies because it costs more for them to get it out of the ground. So that can weigh on the gold miners over time. But the other way to play it is through the royalty companies. There's a lot of good, successful gold royalty companies out there. Although unfortunately, the leader, Franco-Nevada, is under pressure with the Cobre Panama mine and dispute that we were talking about with First Quantum.
Right.
But Wheaton Precious and Osisko Royalties are two other good options. So lots of good ways to get exposure to gold, and whether it's royalties, the miners, or the commodity.
What kind of environment is this for the juniors, the companies that explore or have fairly early stage projects?
It's been a tough environment for juniors across all commodities in the last few years because there hasn't been a lot of money put into that space. But at the end of the day, that's going to be a good long-term story because it also means there's no big exploration going on and there's no big projects being built. So juniors are kind of the long-term future of the sector, and when there's not a lot going on out there, that's kind of building a case that the commodity could go on a run for a while.